My question is for Peter King, noting that you're only going to be in the job for a couple of more days, but you gave an answer earlier to Carrie's question that I thought was interesting, and I kind of feel like it captures the essence of this resolution and this policy, which is that you said that by 30 September next year, if a client doesn't have a 1.5 degree line transition plan, you're going to reassess that relationship. That is in essence what the resolution is asking for, is for Westpac to reassess, because allocating capital towards companies who are still pursuing the expansion of fossil fuels, which is very capital intensive. You know, last year, John McFarlane actually said when Westpac gives corporate loans out, it has no control over what the company decides to do with it. So when it goes towards a company that's expanding coal, oil and gas, then Westpac seemingly has no control over whether that company is actually using it to finance its expansion. So I suppose my question kind of gets to, if a company approaches you next year and is wildly off from 1.5 degrees in its transition plan and says, we would like some more finance, please, what is Westpac's response going to be?
I don't know, because I won't be here. And I'm not saying that. I'm sorry, that was a bit trite. No, I think I've said, you quoted back accurately what I said. And so I think Westpac will think about the transition plans through the new framework that we put out in the climate plan and as the relationship. So I won't be here, so I'm not going to be any more specific than that.
Just on that, Carl, just to be clear, he's not going to be here either, he's quite right. We will reassess it, and we'll sit down and we'll reassess exactly the level of commitment we've got and what that may look like or not look like. But we're going to just give them the time to get that done and not try and preempt that as it stands.
I just kind of want to understand what the point of the 30 September 2025 deadline is then, because it's a stated requirement, right? So a requirement should naturally say, well, if you're unable to achieve this, then what is the consequence from the bank? That's essentially what the resolution is asking for. Because as I said in my opening statement, that's 3.5 years that the clients have known that you're going to have this requirement. So if it continues on past September 2025 as a non-requirement, it kind of calls into question what the purpose of the policy is in the first place.
Well, I think one has to understand what we're looking for in that transition plan, and that is, you know, a credible pathway to that. And you know, we're not going to prejudge that. Every company is different, and it's not just us, but there are a whole range of other stakeholders they've got to weigh up, and people like us, they've got to weigh up in how they put that together. So, but I don't want to be evasive here, but also can't be too prescriptive either. So let's give the time. We work with them. We're getting an overwhelmingly positive response from just about everybody to try and get there. So let's just work through it. Yeah.
Just to be clear, we're not asking you to prejudge their plans. We're talking specifically about after the deadline, what's going to happen then. So we're not asking you to prejudge. We're asking what's going to happen if the determination is that it's not Paris aligned.
Well, again, it depends on the relationship we have with those clients and what that means. So let's work it through this year.
Thank you.
Thank you.